So sports betting is a thing. Of course, it's been a thing for a long time, but it's a more accepted thing, a more legal thing now. And it's a thing that I do. I don't do it very well. I don't lose a whole lot, but I lose more than I win, generally speaking. And I've been thinking a lot about betting and gambling and prediction markets and what the future holds for these things. When I'm placing a bet on a basketball game between the Chicago Bulls and the Washington Wizards, the outcome of that game doesn't impact my life whatsoever. The reason I'm betting is because I just want to have a little fun. Again, we can argue the morality of these casino companies all we want. I want to have a little fun. I want to make a little money. Really, I want the feeling of knowing that I was right about something, that I called it, that there's a record, and it happened the way that I called it, that I was right before it happened, right? That's it. Ultimately, if I lose a few bucks, that's what it is. And if I win a few bucks, that's what it is. But if I don't make a bet, I don't care about that game. It doesn't impact my life. There's no butterfly effect of anything. It just, the game happened. Maybe I slept right through it. I didn't even know. It didn't make any difference in my life. That's all sports betting is. That's why people play sports bets, is because they just want to make a little money, want to feel good, want to be right about something. I want you to think about what insurance is. Health insurance, life insurance, car insurance, flood insurance. Insurance is a gamble. Insurance is a wager. Insurance is a wager on the worst possible outcome, right? I pay a little bit of money at really long odds that I'm going to get in a car accident at some point this year, this 6 months, whatever. And if I get in the car accident, I get paid at the odds that whatever. This is just rough, basically speaking, you are wagering on a bad thing happening to you. You can't fake it, that's called fraud. You're making this wager not because you think it's going to happen, not because you want it to happen, but because you want to be prepared and protected if it does. You don't want a flood to wash your car and all your possessions away, kick you out of your home, destroy whatever. You don't want that to happen. You don't even think it's going to happen. But if it does, you would really like a lot of money in your bank account so that you can deal with that, recover from that, right? So we have gambling to speculate, and we have gambling as insurance, right? As arbitrage, the way that I've been thinking of it is arbitrage between timelines, right? Arbitrage is this idea that you have something and it's worth more in one market than it is in the other, and you profit. You see that, you spot that difference while it still exists, and you take it from one market, sell it to the other, and make the profit, right? Insurance is just arbitrage between timelines, right? There's one timeline where no flood hits, and there's one timeline where a flood hits. And in this timeline where there's no flood, I keep all my possessions, I make so much money, just to think of it in purely economic terms. I make so much money, I'm worth this much, my income stays this much, and whatever. This is what I have. I lose that if there is a flood that destroys all my things, keeps me from commuting, injures me, whatever, the worst. And so what I can do is say, I have this much money, this much earning, this much capital, whatever, in this timeline, and this much would be worth a lot in that timeline where I wouldn't have it, right? So what I can do is place this small bet at really long odds on the bad timeline happening, so that if it doesn't happen, I haven't lost everything. I've given myself the security that if it did happen, I'd be okay. I lose an amount of money that I'm fine with losing, and everything keeps going. I keep earning, I keep living. Whereas if it does happen, again, now I get to cash in on this really big bet, and I have the security, the money that I need to make sure that that thing didn't happen. So wagers on more serious things as insurance, or maybe the other, if you want to think of it the other way around, insurance as a wager on the worst happening, not because you want it to, not because you think it will, but just as protection, insurance, assure, confirming that you're going to be good. The reason I've been thinking about all of this is because there are these things called prediction markets. Sports betting is just one form of a prediction market, a place where you can buy and sell contracts that a thing will or won't happen. PolyMarket is an example of this. Of course, it's illegal in the United States, and I'm not condoning or suggesting anything. I'm not making financial advice here, but PolyMarket is a thing, and you can make bets on all sorts of things, right? How many tweets is Elon Musk going to put out between December 27th and January 3rd? Look at this. This is crazy. Like, a lot of money. People put a lot of money. This, of course, is purely speculative. This is a speculative prediction market, right? My life doesn't change if Elon Musk makes more or less tweets. Maybe the content of one of those tweets could have a fairly significant impact on world events, US politics, the economy. I don't know. But generally speaking, the volume of tweets that this man puts out really isn't going to affect my life a whole lot, right? This is just something fun to wager on, to be right about, to make a little money on, whatever. This is what people do. Will the price of Bitcoin move above $94,000 on January 3rd? Or be above, end above, whatever the resolution condition is. Of course, there are going to be people in this market who are just speculating, who just, again, want to be right. And that's fine. Speculators are not a bad thing, I don't think. They provide the liquidity in the market. Again, people have fun. They're there, and the market is there so that they can make money. They're attracted to the market so that they can do their thing and speculate. That's what makes a market. But I want you to think about, there are going to be people who have significant sums of Bitcoin, and especially given where the price of Bitcoin has been in recent days and weeks. If the price of Bitcoin isn't above 94K tomorrow, there are going to be longtime Bitcoin holders, whoever, who are worried, nervous, my holdings, my whatever. This prediction market, betting no, and if you don't know how it works, you buy shares at a certain amount between 0 cents and $1. So if I buy a share of no, and right now it's at 14 cents, then that one share, if it doesn't hit, I get $1. So if I get 100 shares at 14 cents, you get the difference, do the math. This market is an informal insurance opportunity for Bitcoin holders to hedge, to arbitrage between timelines and hedge their losses, mitigate their losses, whatever they would stand to lose if Bitcoin isn't above a certain amount tomorrow. And we can also go on and look at the Fed decision in January. It's a very serious thing. And obviously right now there's not, a whole lot of movement, because it seems pretty clear what the Fed decision is going to be. And that's a good thing. That's what the Fed decision is supposed to be. It's supposed to be consistent. It's supposed to be something you can expect, something you can rely on. And so because you want that expectation, again, each of these, you're going to have a yes and a no. So if there's a 92% chance that there's no change, the yes, there will be no change, you get pretty good odds on no. 8 cents to the share on no. You can make, especially if you're a big Wall Street company, if you're a rich and famous investor, if you're whatever, you can put a decent amount of money on no, there won't be no change. That is to say, yes, there will be a change. And hedge against whatever you would stand to lose. Your current expectation, the timeline as things go, you're expecting there to be no change, and you would continue making a certain amount of money. If there was a change, you would lose this much, and you can arbitrage between those timelines. You can hedge that bet. You can wager on the worst. And those are just two examples. I hope this is all making sense. But right now, PolyMarket, again, I think by and large is just a place where people go to speculate and have fun and like to prove themselves right. But I think prediction markets like this, if they're not already being used in this way, I think they will start to be used in such a way where people, whether just Joe Schmoes like you and me, big companies, big investors, tech people, whatever you want to say, are going to go to these prediction markets and see them as opportunities to take out little insurance policies. And I even think the insurance policies that you and I live with as we know them could come to be treated in this way as well, rather than going through a big insurance company. I think there's a possible timeline in which our future of insurance is peer-to-peer, is democratized, is crypto, and is going through prediction markets like PolyMarket, right? If you know anything about the whole financial collapse back 2008, 2009, what happened was these, investment banks were pooling all these mortgages together, selling them as assets, and these mortgages had different tranches so that the best, supposedly the best, most likely to repay were at the highest tranche, the least likely were at the lowest. Now, obviously, that wasn't handled very well, and everything happened that happened. But I don't think the underlying idea is bad. This idea of a mortgage as an asset, of breaking people, of pooling a bunch of mortgages together, as long as you are honest about which ones are good and which ones aren't, pooling them all together, letting people buy and sell and trade these things, that could be our insurance. Take a quick assessment, do a quick scan of your driving history and your entered into one of these pools for car insurance. Will user X experience a car accident in the next 6 months or the next year? And your insurance policy is basically one, yes share at very low odds, 5, 6 cents, 4, 3, 2, 1 fractions of a cent per share, right? And you're $100 a month, or maybe you do it all at once, whatever. It would basically experience the same to you as you do go into Geico or whatever. But instead of Geico, the people on the other end of that bet, the people providing that insurance, that money, are just anyone going on PolyMarket, big institutional investors who want a safe investment. If you're pooled together with all these people, sure, 1 or 2 or 5 or 100 of you or whatever will get in a car accident, but if the pool is big enough, most of you won't, right? And if you're just like in that pool, you know what I mean? Like that could be, and you could buy into other pools, you could buy into other people's pools of like, no, this pool, there will not be car accidents. And for each individual within that pool, a little bit, you don't get your money back because they got in the accident and they collect, but for the vast majority, they won't, right? I hope I said that right. They will, they won't. Few people will get in accidents, they'll collect the money. Most people won't get in accidents, and those are going to be the 99 cent to $1 odds, right? Like very strong that they're not going to, and then you'll get that money back. You won the bet. So instead of the insurance companies, which a lot of people are mad at right now, making all the money that they make, it's going to be you and me. We're going to be able to, and corporate investors on Wall Street and all that, and people who already have a lot of money, yes, but there will be an opportunity because of prediction markets, because of crypto, to democratize insurance through prediction markets. That is what I think. And I think that's exciting. And if I really knew anything, I would probably not make this video and instead work to make that happen and profit off of it. But I'm lazy and I don't know how any of that works. So I'm putting this out in the world in the hopes that my ideas got your brain turning a bit. And if you did like it, let me know. Give me a like, give me a subscribe. Maybe even give me a share. Send me off to one of your Silicon Valley tech bros on an ayahuasca trip and see what he thinks about it. So that's all I got for you for now. Take care. When I'm placing a bet on an NBA game between the Chicago Wizards, wow,